One of the most frustrating experiences you can have as a home buyer is when after weeks or months of looking, you finally found a good home that checked all the boxes and you put an offer in, you made it extra strong, you even offered more money than the seller was asking for. And then after a day of contemplating, they get back to you and say, sorry, we had 7 offers and we chose another one. What would you do in that situation to find out how much money the other people have offered? Well, it turns out there is actually a way you can know. So we have analyzed over 2,000 deals, and I'll walk you through today how much money over or sometimes under list price people were paying. I'll show you on a high-level overview, and then we go very deep into the details so you can see on individual deals, individual price ranges, how much people exactly were offering on homes. Then I also want to take a look at basically real-time what's going on in the Milwaukee market. What are the implications from the policy changes that we've seen coming out of Washington with tariffs, the fluctuations we've seen in the stock market? Is that impacting the real estate market in the last few days? And if so, what are the implications? What does this mean for the Milwaukee market? I have some, close to real-time data for you. And then finally, I want to take a quick look on why the things are happening in the Milwaukee real estate market, because I believe once you understand why things are happening the way they are happening, then it puts you in a position where you can much better anticipate what is going to happen next. All right, let's get to it. The first question is, how often does it actually happen that homes in Milwaukee are selling over list price? Is it something that happens once in a while, or is that fairly common? We have analyzed over 2,000 deals from the first quarter this year for the Milwaukee market, and about 1/3 of all the deals did not sell over list price. So they sold either at list price, which is the blue share here, or under list price, which is the green share. If you've been following my monthly market updates, then you know that Milwaukee has been competitive for quite some time, for several years, and things seem to accelerate here. This year in February, Redfin named Milwaukee the #1 most competitive market across the entire US. Home prices are not going up as crazy anymore as they used to in many of the hot markets, especially in the South. They're moderating now. They're still going up, but on a much, much slower rate than they have. So now things are actually flip-flop, because Milwaukee never was hyper competitive, but now things are actually accelerating a little bit. And you can see this reflected here in the data. So the next big piece here is over 1/3 sold quite a bit over list price. So we're looking here at up to 5% over list price. That is very common. I think it's also very handy to look at percentages, not so much at dollars when you're talking about this, because it used to be, we offer $2,000 or $5,000. That was 5 years ago. It's better now to think of this in terms of percentages over list price, and I'll show you why and the data in just a second. So even more competitive, between 5 and 10% over list price were about 15%, and then you have the crazy outliers that went over 10%. So I worked on a deal that went actually $200,000 over list price, and those are outliers. So I wouldn't regularly concern myself with that. For the most part of the market, 2/3 of the market, you're either between -5% and +5%. That is the vast majority. One thing that is very important, and always when I sit down with clients on the buying side or on the selling side, we discuss this in detail. Most clients are so fixated on list price. List price is just one of several prices that you need to understand. So list price is more of a marketing tool. That's a starting point. And in the market where we're at currently, you put out a list price, and then you have a target sales price, which is usually higher than the list price. And that's important to understand. Then you also have fair market value. So from the buying side, you want to understand, is the list price above or below fair market value, because that determines the rest of your strategy. And is it actually smart to offer a little bit higher than list price, or are you senselessly and completely overbidding on the house? So understanding the difference, understanding where fair market value is compared to list price, and later on also what can we expect from the appraisal, that is actually crucial, and you have a lot of money at the line. So it's really important that you understand the data for that. All right, the other thing that's very important to know is not every listing is selling. So this is a big mistake that sellers are making. About 724 listings expired this year without a sale. So a lot of sellers are under the impression because the market is hot and competitive, they can ask whatever they want. That is actually the number one mistake that sellers are making. They're overconfident, they're overestimating what the market will bear. They're going out way too high, and they completely underestimate how educated and smart buyers are. They will ignore the listing, and it will either not sell at all or sell for a substantial discount. So that is really a big mistake that you can make as a seller. But not all markets within the Milwaukee area are the same. So let me walk you through a few examples. So what we just looked at here is basically the sale to list price ratio. You can express that in percent here as well. And I have here the Wauwatosa market for single families, and you can see we're currently here at 104.2%. So on average, buyers have paid 4.2% over asking price. If you compare this, for example, with the Mequon market, we're looking here at a very different situation. So on average, buyers were able to negotiate a little bit of a discount, 0.3%. Of course, on a higher price point, that also works into the dynamic here, but the two markets work very, very differently. So you cannot take the data from one market and apply it in the other market. Milwaukee condos, for example. So this is not Milwaukee single families, this is specifically the condo market. Look at that. 98.3%. So you always have to look not at the total Milwaukee metro area. The rules don't apply. It really goes neighborhood by neighborhood, even property type by property type. Duplex market works differently than a single family, than a condo, than vacant land for sale, etc. Next, let's break it down and go granular deal by deal. How much have people actually paid over on the list price? Every yellow dot on this chart is a house that has sold here in the Milwaukee area. And we have it here expressed in percent. This would be list price, and then here you have over list price, and here you have under list price, and this is over different price ranges. So you can see how that pattern is changing as we're going up in price here to about $500,000. So you can see a lot of dots here in the 0 to 5% range, then quite a few up to 10, and then you have some outliers that are going up all the way here to 20 and even to 30%, which is telling you that there was something wrong with the pricing strategy to begin with. So that house was massively underpriced. And typically it's not one offer that comes in so high. It's typically, from my experience as a listing agent, is buyers are smart. They recognize that. And then you have typically 2 or 3 offers that are somewhat even similar here. In terms of being able to negotiate when it comes to going down, manage your expectations here. You can see there's not a whole lot going below -5% to list price. So typical range of negotiation is around 3%. If you want to hit a seller with an offer that's more than 5% less than asking, then manage your expectations. That is probably not coming together. There's a whole lot about strategy on how to negotiate, because that is actually in many cases very appropriate to come in with the lower offer, but it needs to be presented the right way. You can't just lowball the seller for the heck out of it, but if you present it the right way and you make a rational argument, then you can be very successful with that strategy. We've gotten some really good deals on the contract this year. So the question is, what happens when you go into the higher price ranges? These are the deals under $500. What do you think this looks like over $500,000? Are we seeing the same level of aggressiveness, or is it maybe a little bit lower? So here's the data. You can see, first of all, much fewer dots here, so not as many homes sold. And then in percent, it is not going up that much more. So you're more in the 3%, 5% range, and oftentimes there are actually substantial discounts being negotiated. Now, the second part of this here is timeline. So this is looking at it over different price ranges. Let's take a look how days on market, how long the listing has been on the market until it gets offers, how that plays into the whole dynamic, and that is super interesting. So what you can see here are, across all price ranges, the first 20 days of how long it took for a listing to go under contract. And you have a massive concentration here right at the beginning. This time I chose to express it in dollars. So I cut off the chart here at $50,000, but this goes way higher. Those are the outliers. But I wanted you to see the majority of deals that are closing on the first weekend. So these are the first 5 days, are somewhere between $10,000, $20,000, $30,000, $40,000 over list price. As we are going further out in the timeline, you can see that this is changing. So there is a lot more negotiating happening. And this is important to understand for sellers. If you don't get an offer in the first week over list price, you are probably not getting an offer over list price. Then the odds are that you're going to be right here on the zero line, or that you are going to be down here. There are still a few. Some of them could be data glitches, I would assume, or something has changed on the listing. But generally speaking, the longer you're on the market is the more stale your listing gets. And after a week, buyers are even going and asking me, hey, Marcus, what's wrong with the listing? It didn't sell on the first weekend. I'm like, yeah, it's only been 5 days. But it's a reasonable question in this market. I remember a while ago, 10 years ago, it used to take half a year to sell a house. And now people are asking after 5 days, what's wrong with it? Why did it not sell? And usually it's either condition or price, and sometimes a combination of both. Now, next, I want to take a look at cash offers versus financed offers, because a lot of buyers that are getting frustrated that are not getting the offer accepted, they're thinking, oh, we must have gotten beat out with a cash offer. So how common is that? The green bar here is showing you cash offers. So out of the 2,000 deals that we analyzed, 16.3 of them here in Milwaukee were actual cash offers. Most of them, I would suspect, I don't know this, most of them I would suspect were actually real cash offers, but there are ways to make a financed offer actually look like a cash offer, or from a risk point of view, to make it as attractive as a cash offer. So there are actually ways as a financed buyer how you can compete with cash offers, but it's not that common in the first place. A couple of things that I should point out. Cash buyers are sometimes overestimating the value of making a cash offer. Every offer is a cash offer at the closing table because the seller always gets cash. So in practical terms, when I sit down with the seller at the kitchen table on Sunday night and we're comparing different offers, I would say most people value a cash offer for about $10,000. Meaning if the difference between a cash offer and the finance dollar is $10,000 or more, a lot of sellers will go for the higher offer if it is financed. And then it factors in what are all the other terms that are in that offer, because financing or cash is only one of them. There is about a dozen things that we can strategize with when we're crafting an offer, and you want to have your offer like really well-rounded, because it is not always the highest offer that actually gets the house. It is oftentimes an offer that is very carefully crafted, that meets the needs of the sellers in a lot of different categories. Logistics and timeline oftentimes play a crucial role in it, and also how you're moving the risks between the seller and the buyer. How much risk of the transaction not going through do you want to push over to the seller, and how much are you willing to accept as a buyer? So all those things factor into it, and crafting good offers is really an art. This is, by the way, where experience is coming in. So it's very difficult if you don't do a lot of deals, or if you're not involved in a lot of deals, to know what a good offer should look like. As a buyer in this market, you really are relying on your agent and at the experience of your agent. If they do only 3 or 5 deals in a year, they won't have that experience. If you're doing 20 or 30 or 50 deals in a year, then you have a lot more data points, a lot more experience. And when you look at it through that lens, I think it becomes more clear to understand why the experience of a real estate agent is so important to manage, navigate these things correctly. Both on the selling side, you need to be positioned correctly. That can be one small mistake, basically going out there with the one strategy, that can cost you as a seller a lot of money. And on the buying side, of course, it's the same thing. You can get very frustrated. I always hear stories from buyers that have written 5, 6, 8, 10 offers and gave up because they're like, yeah, we continue renting because we never seem to be able to get a house under contract. And then you have to consider the individual market that you're working in. So as we've seen before, Wauwatosa behaves differently than Mequon, behaves differently than the condo market for Milwaukee, and differently than the condo market in the third ward for that matter, which is an entirely different animal. So this is why experience really matters. All right, let's move on to the next question. How is US policy impacting the Milwaukee real estate market in the last 2 weeks? That is a very common question that I'm getting at the moment, because we've seen a lot with tariffs, with the wild swings in the stock market, with recession concerns. Of course, the news media does more to terrify than to clarify, and you really want to look at the data. I spoke about it a little bit in my last market update and gave you my take on that, but it was all relatively fresh. Today is April 12th, and I was actually able to mine some data. It was a little bit tricky to get to it, but these are the accepted offers that we have seen so far in the Milwaukee market from the beginning of the year all the way to March 25th here. The orange spikes that you see here, those are the weekends, Saturday, Sundays. And you can see here the importance of weekends and how we are in that weekly cycle. And there seems to be a downward trend. And usually when I see economic changes, when there is economic uncertainty, or even when interest rates are moving up or down, up usually, then the reaction that you get from the market is that there is a pause. The market is freezing for a little bit. Especially with mortgage rates, and then everybody gets over it. They're like, all right, those are the new rates, and then things are getting moving again. So I was very, very curious myself to get a hold of this data. It took me a while to dig it out. So here are the last 2 weeks. So I actually expected buyers to take a little while to work through that uncertainty and make up their mind before they're going back to the market making offers. It actually turns out that a lot more offers have been made in the last 2 weeks than in the period prior. So the stock market crash did positively not impact the real estate market here in Milwaukee. If you want to understand better on the mechanisms that are driving this, watch my April market update video. I'm going into details on how these things are working economically and why psychologically oftentimes money is going into the real estate market when things are getting dicey on the stock market. Next, let's try to better understand why is the market so competitive? Why are buyers competing so hard to get an accepted offer? And it's basically economics 101. It's supply and demand. We currently don't have enough supply. I have a chart here that shows you inventory, housing inventory expressed in month of supply. If you're not familiar with that, that's like how much milk do I have in my fridge? Is it enough for 1 week or 2 weeks? And that's basically the same thing here with housing inventory. The red line is giving you national inventory. So we can see here expressed in months of inventory in 21, 22, when we had that national home unicorn market price rally, everywhere go crazy. All the inventory got sucked out of the market. And then from 2022 on, things gradually started to normalize more. And right now, the US national market has quite a bit more inventory. And this is why we're seeing prices or price appreciation to moderate. So prices are not coming down, but they're not going up at a crazy pace anymore. They're going up more like with the rate of inflation. Now for Milwaukee, a different story here because our inventory used to be much higher. That's in green here. And then we kind of flatlined here. You see the seasonal up and downs that we always have with summer and winter, but we're basically in the tight inventory situation that we had 5 years ago. We did not go as crazy as the rest of the country did in 21 and 22 during COVID. A lot more moderate behavior here in the Milwaukee market, but now we're getting more and more in a situation where demand is just outpacing supply by so much more that the market is getting competitive. For some additional context, let me show you a map of the US that shows the inventory difference between 2019, the last year before COVID, and the market today. So the brown markets are where we have a lot less inventory, a lot fewer homes on the market. So we have a housing shortage there. This is where you see upward pressure on prices. And then the green areas is where we see today a lot more inventory than we actually have already seen in 2019. And those are the markets where you see downward pressure on prices. So keep that in mind when you see something in the news about where the real estate market is going on a national basis. That's very difficult to say because Florida and Texas, for example, are in a very different price dynamic than we are currently here in the Midwest. And the root cause for all of that inventory shortage is in new construction. So the US has a chronic housing shortage. It has even become a topic in the presidential election last year. I'm sure you recall, you've heard it on the news. So on average, the US is building a little bit more than 1 million single family homes a year. Easy number to remember, about 1 million. And then we went crazy here in the early 2000s and built a lot more homes than we needed. And we financed them with loans for people that didn't have an income. So no jobs, no assets, these ninja loans. And then, of course, we were surprised when they couldn't make the payments, and then all these homes came back on the market as foreclosures, and the rest is history, I'm sure you recall. And that was not only traumatic for banks and for consumers, it was also a very tough time for home builders. A lot of them went out of business, and the ones that survived decided that they're going to be a lot more conservative and build a lot fewer homes. And so over the last 15 years, we have undersupplied the market. And so now we have a deficit, a shortage of homes across the country, depending on whose statistic you believe, between 3 and 5 million units. So given the fact that we're building in a good year only a little over 1 million, it will take us a while, many years, if not a decade, to catch up with the supply side. And that is the reason why we have a national housing shortage. For Wisconsin and for Milwaukee, that is even more pronounced. And you can see that when you're driving around, there are not that many new homes built. So we basically have the inventory that we have today. A couple hundred that are being on the market from builders for spec homes are usually priced now between $550,000 and $650,000 for a new build, and that, quite frankly, is too much money for a first-time home buyer and for a lot of even second-time home buyers. Just too expensive, so that doesn't help us. All in all, if you want to talk a little bit more about your personal situation, who you work with really matters. Doesn't matter if you're on the buying side or on the selling side. If you want to have a chat with me about your personal situation, about your real estate goals, schedule a Zoom call with me. You can just go on my website, click on schedule a call with Marcus. This is what you're going to see. So this is my schedule for next week. You can see for Wednesday, I still have quite a number of time slots open, and you can choose if you want it to be a phone call or a Zoom call. And we can have a quick chat of your personal situation, what you're trying to accomplish, and then I can give you my take on how to best get to it. You also have my contact information here, so if you want to give me a call, here's my phone number. Most people choose to send me an email. That's m.auerbach@kw.com. I'm looking forward to hearing from you. That's all I got for you today. Thank you very much for watching. I'll see you at the next time.